Okay, so as promised, let's just go through some of the recent price action here. So just going to utilize bar replay and let's just bring it back to, let's say, around here in price action. So obviously you just looked at this. Hopefully you have watched part one of this flip walkthrough, and we can see that although the 4 hour is bearish right at this point, right, because this was the swing high, this was the swing low, and we were pulling back, we could start to see how demand was starting to take control, because we came into this supply zone here, we reacted, we pushed up through, and we came back into demand. As we can see, that led to the fuel to then actually break up, and now we have that confirmed 4 hour break of structure as we are clearly closing above. So let's have a super quick recap of the sort of major high time frames. So weekly chart, you guys should be very familiar with this now, right? We are stuck within this larger bullish range. So this is a high, this is clearly the low. We are in demand. Price did try to make that higher high, it failed to do its job. So then we knew there was a high probability that this weekly low was likely to get run right, and price was likely to take that out. Now price has done that, and we started to retrace. So we are showing bullish signals, right? There's obviously still going to be some demand left within this zone. However, we do have to be aware that price did try to do its job, and now it's come down and it's taken out the reaction. So, really in theory, anywhere within this entire buy to sell range is actually a weekly flip supply zone, right, to take us lower. So it's getting a little bit messy, but I wouldn't worry about that too much for now, right? Getting too caught up in the higher time frames in terms of which way this is going to go. Let's just keep structure nice and simple. We've swept a week low. We are still within the bullish range, and at the moment the lower time frames are starting to break to the upside. So at a minimum we can start to play a bit of a weekly reaction, with the potential that we may be coming up, right, to take out this high, right, because it failed to take out the low, and potentially make that higher high up there, right? The only thing, again, that's in form of the bearish case is we are coming off this pretty strong weekly supply zone at the top of the range. So, there is potential we could have a short-term reaction and we could start to break lower and switch bearish. But as always, I have no idea. I don't have a crystal ball. I don't need to know which way price is going to go in order to make decent money, right? We just stack the probabilities in our favor and we keep it as mechanical as possible. And at the moment, the weekly is still bullish. The lower time frames are starting to break to the upside. So I'm happy to trade pro trend in that higher time frame bullish direction, whilst being very cognizant and aware of the fact that this move could be short-lived and we may actually come down and take out these weekly lows. So from a daily chart perspective, we swept liquidity. Again, we don't need to worry too much about that just now, but then it created a really strong demand zone that then led to the break of that structure. Price has now come back, almost filled, right, mitigated the EQ. Obviously doesn't have to, markets aren't perfect, but it's a pretty decent sign. And then we came up and we took out this daily high here. Now, this daily high here, it's a little bit of a tricky one in terms of whether you call that a swing pullback or a minor pullback on the daily high. It's obviously definitely a 4 hour swing high, but it's it's not overly convincing whether that's a major daily swing high in my opinion. So I'd be more looking at kind of price action like this, where we have a clear lower low, lower high, and then a bit more of a convincing swing break like that. So this high here, this minor high, maybe should be used for liquidity, just like this one was here, to sweep that, and then we may form that larger lower high and then roll off to the downside, and then we may actually get that weekly bearish trend change. But regardless of whether you view it as a true swing high or not, that is a decent sign there. That price is starting to show those bullish intentions, right, after mitigating that daily area of demand. Because remember, we had this daily area of supply, price came in, reacted, and pushed up through. So even the daily is showing you that flip zone, showing you, that demand is starting to take control. So dropping down to the 4 hour chart, as we've just kind of already been over this price action, we were bearish. We came up to kind of nearer the origin of that supply zone. Demand started to take control, right? It took out the reaction, and then that led to that break of structure. So now that we have a 4 hour break of structure, what is the next thing we expect? Well, we expect a 4 hour pullback, okay? How can we know when that 4 hour pullback may be, somewhere where that may start to kick in? Well, we can look left at old areas of supply, right? So we kind of have this entire, let's draw this up, this entire 4 hour range here, which, it's a bit more messy of one, but it is, technically a flip zone, because we do have this entire sell before the buy, which you can see, it's a massive zone. So, there's going to be quite a few flip zones within this, right? But essentially that's where that first sort of big reaction starts to happen and then fail here, right? So it's a big candle. I'm going to refine it a little bit more to this inside bar, but even that doesn't really get engulfed. So what you can do is even be a little bit more accurate and refine that to the 4-hour wick along here. So we still got a decent enough of space, right, to start to kind of target that, to try and push the 4-hour a little bit more. So this is something you have to be aware of, right? When you get, for instance, let's say the 4-hour break of structure, although we expect a 4-hour pullback, that doesn't mean that the moment you have a 4-hour break of structure, you have to sit on your hands, right? You can still keep trading long. It's just that you have to manage your expectations of how far to push any longs you're in, because you have to be aware that at any point this could start to pull back, right? So, again, if this was the daily and we start to get a daily break of structure, yes, we expect a daily pullback, but it could go on for multiple days before that pullback kicks in, right? It just means you have to manage your expectations of how far to push it. So 4 hours bullish, we have a break of structure. There's potential price can go a little bit further, so if we get some intraday opportunities to go long, we can start to do that with a very clear target of where potentially we may want to start to partial out any profits that may be running, and start to take our profits, or even potentially look for some shorts to play that 4-hour pullback. So with the 15-minute chart, obviously clearly bullish as well. Let's just draw on some structure so we can see what's going on. It's always worth, if you're doing this in live market or even when you're backtesting, just to go back, a few sort of phases in price action and just paint the story to see what happened. So we had that pullback, right? This was the low. Price tried to come down and take out that low, but we can see we failed to close above it. So at that point, we are still bullish, and then we come up and take out that high to then form another high. And we are starting to pull back. So let's just play this forward a little bit and see if we can, essentially what I'll be looking at this point, right, is I know this is kind of how I'll be talking to myself in the market, right? As I was just saying, the 4-hour chart, we've had that break of structure. We are bullish, so I'm expecting a 4-hour pullback, but I want to try and push to see if we can take advantage of this next leg up to that area of supply, right? So what I'll be looking for in the 15-minute chart is for price to pull back to an area of demand, 15-minute demand, for me to then look to get long. So already what I can see is we've had a bit more of a minor pullback. If I just measure this in pips, it's not even 10 pips, so I wouldn't really classify that as swing structure. I would classify more of that as just kind of a minor break of structure to the upside. So it's still valuable information. We have created an M15 demand zone. It's not a swing break of structure, so it's not the most significant of demand zones in the world, but it is there, right? So momentum's clearly strong. I can be more than happy to be reasonably aggressive if I get sort of my lower time frame confirmations to look for potential higher lows within here. Okay, so let's play this forward a little bit more and wait for price to start to come back down into our M15 supply zone, right? So we can see price starting to pull back. And this is where I'll just be waiting patiently. Set your alerts, you don't have to be watching price action minute by minute, okay? So now price is starting to pull back, so this is where I'd start to be on sort of high alert, right? Looking to see potentially, are we going to react from this area? Are we going to get a nice 15-minute high low to look for longs? Or potentially maybe we're going to have a bit of a deeper pullback, because for me, I would be viewing that as my swing low, right? It's the lowest point. I took out that recent swing high, and now we're starting to initiate a bit more of a pullback. So really, we're playing with this entire M15 range. And remember, if we mark on our premium discount, ideally I want to be buying in the discount, but as you guys have probably seen from your testing, price does not always pull back, especially momentum is quite strong. So higher probability to be buying down here, but if I get my confirmations, I'm happy to be a bit more aggressive and buy higher up in this bullish swing leg here, right? So I'm not just blindly putting entries on here. Of course you can do that, but I'd rather, boost my strike rate a bit more by looking to see if this zone is going to hold, by looking at the lower time frames first and seeing if I get my confirmations. Okay, boom, right? What's happened with that next 15-minute candle is we've seen a very aggressive retrace, right? It's fully retraced that candle, and it's moved even higher. So generally what I'll do in the live market is if I have a refined 15-minute zone to a candle, right, but price doesn't hit it, but then I see, what looks to be a lot of demand being filled and a big aggressive move away, then this is where you can just, read between the lines a little bit and go, okay, well, what I've actually done here is technically, right, that entire buy before the sell, that's the whole range. I had refined it all the way to the candle, but price doesn't have to move away from my refined zone, right? It could be, the more of the double candle, right, the pivot, the sell before the buy that took the high, because remember, price doesn't know time doesn't know price. We're just trying to read the order book through the price action on the candles that we see on our charts, because remember, what is those two bearish candles before the move that broke the high? Well, it's likely on a higher time frame just going to be that, see, it's just one bearish candle before the move up if we jump on the 30-minute time frame. Now, you can cycle through every single time frame if you want and draw on, you know, tons of zones. I'm not personally a big fan of that. I'd rather kind of just have my kind of set time frames and just understand what is going on here. So that's why we spent time looking, you know, in the S&D zone creation video, I believe it's called, where we understand now we can have the most unrefined, which is the whole range. We can take it to the pivot, right? There's multiple candles, or even one candle, or even the fractal refinement. But we just have to understand that although the fractal refinement will be a bit more accurate, is sometimes, you know, price isn't always going to initially come straight down to there and move away. So kind of the mini lesson from this, right, is if you have a refined zone, right, and you see price aggressively move away, you don't have to, but if you're happy to do so, I personally am. I'm happy to be a bit more loose with my larger ranges, because what I'm going to do is then jump down to the lower time frames and then look for my confirmations, right? So I'm aware that although we've had a reaction, price could still come down lower. I want to mitigate this first before it goes. So what am I going to do? Well, I'm going to jump down to the lower time frames and see if price wants to actually go from here, if it is ready to go, right? So as we can see from this kind of larger 30-minute range, we've had a very aggressive move on the 1 minute. So let's just play this forward a little bit. So it's a bit more subtle, but what I can see is this kind of major M1 sort of swing high up here. Price came up, it tried to break up higher, it didn't close above, but we did wick it. So if we look again on the 15-minute chart, right, what is that? Well, actually, it's kind of that bullish substructure wick break, right? It's that kind of bullish change of character, kind of just another indication that potentially this is the M15 high low, and it is trying to break up higher. So bit of a subtle thing there, but it is just another tick in the box that potentially this is going to be the low, and this low won't break, and we are ready to go. So where can we look to potentially buy? Well, the most sort of obvious zone, right, would be the M1 extreme demand, right at the bottom of the origin of this move that broke up higher, right? It took out multiple M1 levels over here, right? So it's a pretty decent strong zone, right? We can clearly see the momentum that stepped in during the London session, right? Nested within that larger higher time frame demand zone with here. So there's kind of two ways you can do this. One, you literally either set your limit order anywhere on or within the zone, stop below the low, right? So even at 1.5 pip stop, may want to give it a little bit more buffer. But yeah, that you know, looks pretty safe here, and you can literally just set your limit order there. But I'm going to want to wait for a little bit more confirmation just to make sure that the zone is going to hold, and potentially we're not going to come lower into that, you know, that one single candle refined M15 demand zone. Also, another thing as well is we'll talk about this a bit more in the liquidity module, but it's always also, you know, potentially worth mentioning now, is when you see a reasonably clean, almost vertical straight push up like that, a lot of the times what can happen is price can come down and it can end up just taking out the zone, and it can be a bit of a false signal. So it's kind of to do with liquidity. We'll talk about that a bit more in there. Now, again, it's just probabilities. It's not a certainty. You have to do this for your own testing and finding to see how you get on with these pretty clean pushes, because they also do play out quite a few times as well. So in this case, this is where you can look for a little bit more confirmation if you have some hesitations or doubts about this zone holding. So what essentially I'm going to do is, instead of looking to just kind of set my limit order on the zone, because if you had done that, right, you'd be tagged in now, I'm going to wait for a little bit more confirmation. So what do I actually mean by that when I say confirmation? And it just goes back to, you know, all of the examples that we've been looking before on all of, you know, the theory videos of literally just waiting for market structure to again change character in my favor. I want to see that bullish break. But what also can we use? We can look to see where supply starts to fail and demand starts to take control. So at the moment we can see, right, with the more recent price action, we can see those pullbacks, right? Supply is in control. We are pretty much bearish on the recent M1 price action. So what's happening now is price has come up into this. It's a bit more of a fractal refinement, but we can clearly see, right, there was supply that then took out that low. Price has come back into here and it's reacted and it's pushed down lower. So at this point, what I'd be saying to myself is, okay, we've tapped into supply. That is where the reaction is. So I'll be marking out the top of that reaction point. And what I'd want to see is price come back up and break above that reaction point to show me that the reaction has failed, and ideally get that change of character as well. Okay, so let's play this forward and see what happens. So at this point, supply is still in control, and then boom, we take out that low. Okay, so actually, in fact, this supply here has done its job. It's come down lower. Now we're trying to fill up more orders within the EQ of this M1 demand zone. So now again, what I'll be looking at is I'll see this area of M1 supply, and I want to see price react and take out this supply zone, and also take out that minor high to give us our change of character. So now we can see we've had a pretty strong reaction, but we've just managed to spike below that low. All right, taking out this internal demand. So again, that is showing me that supply is still in control. So now I'm literally just going to evolve my zone towards this most recent zone here. And again, just following the exact same process. So price is pulled into it. I want to see a reaction just to make sure that it's validating the supply zone right. I don't want to just see price smash straight up through. The reaction is key. Okay, boom, there's your bearish reaction. So now literally if I'm in a live market, minute by minute, this is what I'll be doing, this exact same process, just constantly readjusting my analysis and waiting to see that price action model that we need to see. So price is coming to supply, it's reacted. Now what I want to see is price break above that and show me that the reaction has failed. Okay, so price has gone a little bit lower, but we haven't taken out the low yet. So now what's happening is we're just ranging between the high and the low, and we're having that battle, right, between supply and demand. So remember, if supply is going to do its job, it needs to take out this low here. So we tried to come up, but we still haven't taken out the reaction just yet. All right, still having that battle, still having that battle. Okay, we've gone lower, but we still haven't taken out this low. All right, so nothing yet, sitting patiently on my hands, just waiting for price action, and then boom, okay, what's happened? We have broken up above and closed above that reaction point, and we have also broken above that minor high, so we now have that M1 change of character. So what this means is demand somewhere has stepped in to not only take out, right, the supply zone, because price has pulled in, reacted, we just draw it, we've pulled in, we've reacted, we've failed to take out that low, right? So then demand has stepped in to not only take out the reaction to cause the reaction to fail, but it's also taken out that structural high. So now we have that change of character. Now, one little point just before we go any further is kind of talking about mapping types for your failed reaction. So for me personally, as you guys will know, for denoting true swing breaks of structure, so I know where my swing highs and swing lows are, I use type 1 mapping. I want to see a candle closure above or below a high or low, right? But for changes of character, I'm happy to use type 2. All I'm happy to see is a wick break, right? I can be a little bit more aggressive with it. Now you're gonna have to ask yourself, what is in your trade plan for how you define a failed reaction. So this is the dotted line, right, where the reaction started, and once price breaks above it, that is when the reaction fails. But you need to decide, for you, does it make more sense to have just a wick break? Are you happy with that? Or do you want to see a candle closure above that dotted line like we have here, okay? Now, some people want to use type 1, which is the candle closure, because it's more confluence, it's more conservative, because obviously it's a more convincing sign if price manages to break and close above. Other people are just happy with a wick break. And the reason why they're happy with just a wick break, right, so if price spiked up above that dotted line and then closed back down, is because on the M1, that wick break on a lower time frame, right, if we were to jump down to the 15 seconds, probably would actually have had a candle closure on the 15 seconds above that high, right, and then price would come back in, right, and then fill up that demand and then go. So I'm not going to tell you which way is right or wrong. It's going to be, it's going to be down to you to decide what you have more success with, what gives you the highest strike rate, what makes most sense to you, and that will just come with time, experience, and data collection, right? When we go through the testing, which I'll show you how to do later in the course, you can start to figure this out, right? But what I would say is, if you just want a starting point, because I know it can be a bit frustrating when there's all these open-ended questions you may have, the starting point I would give you is to always wait for a candle closure above the reaction point to confirm you have your failed reaction, just because that's a bit more conservative, and that in theory should boost your strike rate. So yeah, I would use for your failed reaction type 1 mapping, candle closures, right, that body break above the high or the low, just to give you that higher strike rate, right, in theory. So just to kind of go back over this, right, what have we done? We are with the 4-hour bullish trend. We've had a 4-hour break of structure, right, which was this line back here. So we know that a 4-hour pullback can occur at any point in time, right? So we have identified an area of supply that we can look to target, right? Because this is a bit more likely where potentially that 4-hour pullback may start, and we can still take advantage of, the next 20 pips or so, right? So I know it doesn't sound a lot, but as you've just seen, when we can get in with 3, 2, 1.5, even 1 pip stops, right, that's a decent amount of R to take advantage of. So we've waited for price to pull back into our area of demand. We've seen that aggressive move away. We've seen that 15-minute change of character, and price has pulled back into our area on the lower time frames, and we're starting to look to get long, right? So if we jump down to the 1 minute, we then identified a very clean area of demand, but we could have just whacked the limit order on, but we waited for a bit more confirmation. We waited for demand to start to step in, right, to cause supply to fail and to get that change of character to the upside, right? So we had those lower lows and lower highs, right? Rejecting supply, it held, pulled back into supply, it held, it made that lower low. We then came into the most recent area of supply. It reacted, it tries to do its job, and then that reaction failed and market structure failed, right? That bearish market structure failed, and we now have bullish market structure with that change of character. So now it is all systems go to look for a potential long trade. So what caused that failed reaction? What caused that change of character? Well, anywhere within this sell before the buy is technically where the demand stepped in. So the most unrefined way of looking for that demand zone is just taking that entire M1 range, right? So I'm just going to use that parallel channel just because that's typically what I use in the live market. So now what you can do is the most unrefined way is to just enter anywhere on or within the zone, right? And then have your stop just below the low. So let's say that gives us 2.5 pips, right? And then you would literally have been tagged in with the next candle. So this is where you need to be pretty quick if you were doing this on the M1 time frame. But of course we get a few more opportunities, a couple of minutes as it taps in again, fills up more orders before we get that true move. So yeah, that's pretty much it in a nutshell. That is literally what we're doing to get those entries, and we're looking for the same thing again and again and again. Now, before I play this a little bit further and start to look at targets and stuff, I do just want to show you a bit more of a refined way of how you could have got in. It is a little bit more advanced, so don't worry if this is the first time you're seeing this. It might seem a little bit confusing, but I promise you, you will get this in time. So if we just look at the price action, the example we just looked at, right, is taking the whole sell to buy range, but how could we refine it even more? Well, we could take that sell to buy candle, right, but doesn't make it too much smaller. But what we can always look for is where was the last point of demand that stepped into the market in order to cause the failed reaction and the change of character, right? So obviously this is where we got that confirmation, but where was the last point of demand that stepped in to cause that move? Well, as we can see what happened, we had this bullish candle, right? Then we wicked back, so we had that pullback on the lower time frame, and then boom, that's where the demand stepped in, right? So those sell to buy wicks show us that lower time frame pullback, and then that's where the demand stepped in. So what you can do on the M1 time frame, right, is potentially read what's going on that lower time frame, and then that is your fractal refinement. And then what that means is you can enter right on there, and you can be a bit more aggressive with your stop, right? I definitely wouldn't go lower than a pip, really, especially when you're starting out. I would say a minimum 1.5 pips, or even really a minimum 2, just in case price can come lower and still reject, something within this wick, okay? There's no guarantee, but I'm just going to show you what essentially you have done is on the M1, read a lower time frame, because if we jump down to the 15 seconds, right, you can see that was the sell before the buy that broke the high. Obviously, you would want to find that a little bit more accurately to that sell before the buy there. And then if you had the 15 seconds, you can then trade with confidence, even with a 1 pip stop. But let's just say 1.5 pip stops below that range there. And that's essentially what you were reading. Now, I want to make this very, very crystal clear. You do not need the seconds time frame in order to be extremely consistently profitable, okay? You do not need it. In fact, I would advise you can't get my words out. I advise you stay the hell away from the seconds time frames, because until you get a lot more experience, until you really nail down your higher time frame zones and understanding even M1 price action, if you're looking at the 15 seconds, you're just going to see a hell of a lot more false signals, and it's really not worth it, okay? The whole point of me showing you this is just purely a price action exercise, just to show you what is going on from a fractal point of view, right, on one time frame. But remember, this can apply to any time frame. You could be on the 4 hour and you can see this price action, and then you would just be basically looking at those 4 hour sell to buy wicks and just understanding what is likely going on say the 15-minute time frame, right? It's just the same thing again and again and again. But anyway, let's leave that there. So now what I would do is start to look for refined targets. So at a minimum, right, we can start to look for price to target this 15-minute week high right here to see if we can get that higher high, because price then may start to pull back. Or we can start to look to push price even further up towards this 4 hour area of supply. But what we can do is try and refine that a little bit more. And what I'll often do is then, if I'm on the 4 hour, is I'll drop into that zone on the 15-minute and see if I can refine this zone even more. So let's just kind of paint the story back a little bit. And what can we see? So price pulls back, it takes out this high here, right? So we have this demand zone, this 15-minute demand zone, and we drag that across. What happens? Price then pulls back into that demand zone. It tries to make a higher high, right? It reacts, and then supply steps in to take out that reaction. So technically, all of this buy before the sell price action is the supply zone that caused that reaction to fail and led to that break of structure over here. But we can see, I don't want to just take that whole range, and also, a lot of it's mitigated with this price action here. So actually, I'm just going to refine that to the last buy before the sell at the top here, and then drag that across, and then that way we've refined our 4 hour zone a little bit more, just to potentially give us not only increased accuracy for looking for targets, but also to potentially increase our accuracy for playing a potential 4-hour pullback if price action starts to break down. So let's just jump back down to the 1 minute and play price forward a little bit. So let's speed this up a little bit. So we can see now, zoom out. Okay, now we've definitely taken out that 15-minute high, right? So you could start to potentially take some profits, but just for the sake of this example, right, I don't want to talk about management too much just now because we will cover this in a lot more depth. I'm just kind of giving you some loose higher time frame targets here that you can think about. So we're seeing some volatility, prices chopping around, nothing to do at this stage, sit on your hands, and then price moves up into our 4-hour zone, right? So that could be your first decent profit target, just over 10R, or we could push this even further and see if price is going to try and go up towards that 15-minute zone. Now, what I'll start doing, right, if I'm in the live market at this point, even if I'm in a long position, obviously I'm biased for price to the upside, but you have to forget about that in terms of your analysis, right? You need to try and keep your mindset as neutral as possible. So I'm just going to drag these zones across just to help with my chart OCD, just so I can see exactly what's going on. But to go back to the more important point of what I was saying is, even if you're in a long position, you're obviously biased for price to go to the upside. Your subconscious is going to be running with emotions, thinking about that money you're making. But what you can start to do is go, okay, I know I've had the 4-hour break of structure. I know I'm expecting a 4-hour pullback. We're now entering that 4-hour refined area of supply, right? We've identified an even more refined area with the M15, but price does not have to reach it, right, before potentially that 4-hour pullback may occur. We could literally tap the edge of this and start to go. So what I'm going to start to be doing is just looking for signs of weakness, looking for signs that price is starting to fall to the downside, looking for those bearish breaks of structure, or looking for demand failing and supply starting to take control. So as we can see so far, the M1 is clearly, bullish. It's still making higher highs and higher lows, and demand is still in control. So we're having this minor pullback here, and now we have tapped into that M15 refined supply, right, for just under 15R if you had, that 1.5 pip stop there. So I'm just going to move that out of the way, and let's just forget about the long trade for a minute, and let's see if we can start to potentially look for that 4-hour pullback. Now, because we've tapped into a refined supply zone, right, that M15, within what is already a refined 4-hour zone, right, because remember we refined that entire 4-hour range to just a 4-hour wick. Now you can start to potentially be a lot more aggressive with how much bearish price action you want to see before you're happy to trade short. Because obviously, if you trade every sort of M1 breaker structure to the downside, you can take a hell of a lot of false signals, right? You could get short and then price can just keep going up and up and up, and you can take a lot of losses. So one of the safest sort of ways to prevent that, and something I would advise to you guys, especially if you're starting out, is to wait for, say, a M15 change of character, right? You'd want to see an M15 minor low go first before you start to look to play shorts, just to increase that probability, okay? But because we found a really nice refined supply zone, and just for the sake of this example, I just want to show you what can be possible. Let's just look for that first sign of the M1 switching bearish. So we tapped into our refined zone, and this is where I'm going to be really paying attention to the detail of what is going on, because we've had a minor pullback, right? So we've had that minor high get taken. So now for me, this would be the most recent minor M1 low. So I'd be looking to see, is that low going to hold? Is this sell before the buy, this bearish candle, going to hold? And is demand going to stay in control? So we pull back into it. Now you can see that bullish reaction, right? We're filling up that demand within here. So it'll be a bit more clear in the lower time frame, because we've taken high, we've pulled back. We're now reacting, right, to this demand zone, and we're trying to make a higher high. So let's see if price can do its job and make that higher high. Okay, boom. So now we've dropped to the downside, right? So, do you know what? In fact, I'll show you what's happened here, because we can see what's happened in the M1, right? We've taken high, we've taken the low, we've had that change of character. But what have we also had, right? We've had that reaction to demand, that buy to sell wicks, but then it's failed and supply has taken control, right? So if I draw this on the M1, all right, those buy to sell wicks, and I'll just draw this for our sort of M1, right, change of character, because I draw this here, right? We took that high, then we took the low, we tried to react, we tried to make a high, and then boom, we stepped in, right? And what's even better, more confluence, is we've taken out this sort of more minor low as well. So, even if you weren't sure, because you're only looking at M1 price action, we've tapped into refined supply within a refined 4-hour supply. We've had our change of character. We can see that flip within there. But then not only that, just look at the momentum, right? That is big money stepping in, right? That is a lot of supply that's come in. So I'm just going to quickly show you on the 15-second, just so it's potentially a little bit clearer. All right, you can see that true breaker structure. It closed above the high. then we would have had this as your essentially your 15 second demand zone. So just draw that on the M1, right? Prices come in, it's reacted, it's tried to make a higher high, and then we have our supply zone. So you could even refine this zone even further to that wick, but I'm not going to over refine it at this point. Let's just stick to the M1 price action, right? And that is what is going on. So now you can look to sell from this area. So let's just keep it pretty unrefined. Do you want to be conservative this one? 2 pips, just give it a little bit more space above the zone, and let's see how price action develop. So we've had that very, very aggressive move away, and this is exactly what I want to see now. A nice corrective slow pullback, showing me that, you know, demand isn't really too much in control, and supply should hopefully now be in control to facilitate that 4-hour pullback. As you can see, we've now been tapped in, so we can start to do what in terms of targets, right? We need to be a bit more aggressive because obviously we're playing a counter higher time frame trend pullback, but we can start to look at the M15 low. Let's see up here. Right, so first kind of real targets will be into around these areas here, right? Because there's obviously still going to be M15 demand, right, where price could pull back. But we have to realize is because we are coming off a 4-hour supply zone and we're expecting a 4-hour pullback, it's likely that these lows can start to go, and we may pull back to where? Back into this 4-hour area of demand down here, right? So that's where I would be starting to look to target. But let's just jump back to the M1 and just see how price action starts to develop as we are within this trade, because don't worry, we'll talk about management in a much more depth later on. So still within this trade, right? Price hasn't taken out the most recent M1 low yet. It's battling, and then we start to go. So we get another break of the low. Now in the live market, I won't mark out every single M1 break of structure. I find it a bit unnecessary, but we'll just, you know, do this for the sake of the example. So yeah, we pace forward a little bit more. Now what we can see is M1 supply starting to hold, right? Because we've broken structure, we've pulled back into the decisional, we've reacted, and we're pushing lower. Now, you know, especially counter trend, it's a little bit more aggressive when you're playing pullbacks, but you don't necessarily just want to take every M1 break of structure and start selling every M1 supply zone, right? You can do it, please test it, see if it works for you, but it is a bit more aggressive, especially counter trend. So what can we do to increase the probability of these M1 supply zones holding when playing a counter trend move? Well, instead of just looking for ones that cause breaks of structure, we can look for ones that cause flip zones. So this is where previous demand zones in the leg we can then use to our advantage, right? So if we look over here where we have this M1 demand zone, right, and we drag it across, we can look to see, is this going to hold? And then are we going to start to break to the upside, right? Or is supply going to stay in control? Because we have had just another break of structure down here, right? So we do have another M1 supply zone here, but like I was saying, I don't just necessarily want to sell everyone's supply zone that cause a break of structure. You can do it, but they're a little bit lower probability than if we can get breaks of structure and a flip zone. So that's personally what I want to see. Okay, so demand has now reacted, we're starting to pull back, so it's going to be interesting to see, is demand going to win or is supply going to win? So we tap into our supply zone, right? We're still battling, we're battling, right? Which one's going to win, supply or demand? Still battling. Let's fast forward this a little bit, and then boom, we come lower, right? So we had to fill up a little bit, a few more orders within the zone, but we never broke up higher, right? And now we've gone down. So what's happening? We've rejected our refined supply. We've had multiple breaks of structure to the downside, right? We had our nice flip zone up here. We can see supply is starting to be mitigated, right? Supply is in control. We're seeing that series of bearish order flow. Old demand has just facilitated that pullback, but ultimately supply is taken in control. So now what do we have? We have an M1 failed reaction, right? Boom. So what that means is anywhere within this whole buy to sell range is essentially your demand to supply flip. But I just don't want to sell anywhere within here. I'm going to refine that to our candle up here just because I don't want a massive stop, and I want to refine my risk reward as much as possible when playing those more aggressive 4-hour, counter trend moves, and we don't even have an M15 change of character just yet. So the reason why I'd be happy to sell from here, right, even though it is a bit more aggressive, is one, because of the area we're coming off from, we have a series of mitigations, right, a series of bearish order flow, so it's showing that supply is in control. But not only now do we have that break of structure here, this is also a failed reaction from this demand zone, right? So if price was to come up, right, and break up higher, then it's very likely we're just going to keep on going, right? Because now that bearish order flow has been broken and demand would then be back in control. So this is kind of the last point of supply that needs to hold if this pullback is going to continue south and continue bearish. So let's play this forward and see if price will tag us in or not. So now we're within trade, right? And then boom, very, very nice reaction. And the reason why we got that reaction is just because of all of the confluence I just outlined, right? This is a strong area of supply. It's the last point of supply that needs to hold, right? We've taken out that demand zone, we've had that breaker structure as well. That is a picture perfect, right, demand zone. Now, in terms of targets, like I said, we're going to start to target, there's multiple targets on the way, but really we're trying to play that steeper 4-hour pullback. So if we jump up to the 4-hour chart, hopefully it doesn't play price action too far. Unfortunately, it has. It's the one sort of drawback of bar replay and trading view is as you cycle through the time frames, it's just going to show the entire next 4-hour candle, which, yeah, didn't want to see price go that far, especially when you're testing, because it can end up showing you that price does go that far, but not to worry. So yeah, the 4-hour pullback, right? Where do we know that price can pull back? Well, it'll be the next sort of 4-hour demand zone where that demand may step in for price to form that higher low, right? So there's no guarantee that price will form a higher low here, because remember, this is the swing range that we are currently playing within, right? This was the lowest point that took out that high. Now we're starting to have a more convincing pullback. So this for me is that swing range. So we could potentially expect price to pull all the way back down into discount, right? But remember, price doesn't have to. You guys will already know that from the testing you guys have already hopefully done on premium and discount, especially on the 4-hour chart, that we don't have to pull down here. And what was the other key thing we know is that when we get that first initial trend change, right, that change of character, that first initial breaker structure, especially when we're coming off from a higher time frame level, it's likely that momentum will be its highest, and it's unlikely that we're going to pull all the way deep before we continue to go, right? Usually we just get more shallow pullbacks and we go. So that's the thought process of how I'm always thinking this in the live market. We've had our 4-hour break of structure, we mitigated our 4-hour area of supply, that has initiated the pullback. So now I'm looking at every area of demand, right? I would have all of these areas of demand drawn on, and I'll be looking at all of these areas as potential points for price to, form that higher low. I'm not going to draw every single one on, but that's just to show you for an example. So when price comes into this range, what I'm going to be starting to do is what? Look for my lower time frame confirmations for price to break structure to the upside, to take out supply, for demand to then be in control, to confirm this 4-hour zone, to confirm that the 4-hour high low may be in place, and then we can look to potentially take that move there, right? But there is no guarantee. We can get in longs here, and it can react a little bit, it can move up, but then it can just be creating, liquidity for price to then come down lower. And again, we can then look for our entry models, we can get long, but again, there's no guarantee that the high low is in place. It can keep coming down before eventually it goes. So that is just something that you have to bear in mind. So we have this larger 4-hour range. You can take the whole range, you can take the sell before the buy, or you could even take it to that last kind of pivot before it broke the high, right? It doesn't massively matter. Just for the case of the example, I'm just going to kind of be a bit more loose and put it to that last sell before the buy larger candle, just because we're going to be looking at our lower time frame, all right, confirmations to help us with that timing. So in terms of the 15-minute, this is where you can start to try and be a bit more clever and look for refined areas of where price may come into. So this is kind of that origin zone here, but what you'll notice is price kind of already tapped that distal, filled quite a few of the orders and went away. Now, yes, price could still come lower. I want to mitigate, the EQ or further, but just a bit of a warning sign that it's not fresh, so it's not as high probability that potentially price may want to come into it. So where's the next unmitigated area of demand that hasn't been tapped into that caused the next break of structure, right? That took out this high here, where you could take this whole bearish candle, you could take the range, but I'm just going to kind of take the origin of that wick and just have a bit more of a fractal refinement. And what is nice about that one is it has liquidity above it. Again, we'll talk about this later, but for the guys who already know about that, or you're watching back through, you'll know what I'm talking about. But what is also a bit more of a subtle point is that I really like it when a refined zone lines up with the EQ of a larger zone. Because what we know, those EQs of those ranges is fair value. They're really kind of pretty strong turning points for price to want to mitigate and go. So I do kind of like it when price lines up like that. But yeah, it's definitely nothing majorly significant. So now we have a pretty nice area to target. But with counter trend trades, I'm a little bit more loose and aggressive in my management. So I'd probably just target kind of the edge of that zone and be happy to take the majority of my profit. So just for the sake of time now, I'm just going to speed this up a little bit and play this forward. And we can see that price came into our 4-hour zone. So let's just quickly look at the risk to reward. If you were to take either or both of those positions, and let's just say you took off the majority of your volume at that 4-hour demand zone there. So you've got roughly 20 are there and roughly 23 that are there, right? Not bad at all for a counter trend pullback, okay? Now, as prices pull back into our first 4-hour area of demand, right, really we want to be focusing on those pro swing trade moves, and we want to start to look to catch that 4-hour high low, right? So of course you could literally just enter anywhere within this 4-hour zone and look for that move, but I want to wait for a little bit more confirmation, a little bit more refinement, and increase my risk reward. So when I'm sitting on the 15-minute chart, what we can do is start to look for bullish signs that the 15-minute chart is starting to break structure to the upside. Now what you'll notice is we have had a change of character, right? Because we had that low, we had a minor pullback, we made a lower low, and then we took that high. So that is a change of character there, and you could start to look for longs within this area. But something we haven't kind of really spoken about too much just yet, but is very, very important, is something called session timing. Now really, the majority of the moves that occur, the highest probability moves, are during the London session and the New York session, but when London is still open. So really, it's as long as London is open, generally that's where you're going to see the highest probability moves. Now at this point where we get that change of character, this is kind of around 7 p.m. in the evening, so that's the tail end of the New York session. London has been closed for multiple hours now. This is when price is usually very, very choppy. You see all of these moves here, right? It's usually very, very slow. During the Asian, going into the Asian session, into spread hours, that is not when I'm looking at the markets and looking to get into positions. So this is generally where I would just play price forward, or obviously if it's a live market, I'd be waiting to around 6 a.m, 7 a.m. before I'm at my desk, and I'm not going to be looking to take trades during the Asian session when price is really slow. So as I'm coming to my desk around 6 a.m, that's exactly where I would be. Obviously I would then do my higher time frame analysis, which we don't need to do now because we've already done it, and I would literally be looking at the 15-minute chart and going, okay, well, 15-minute chart is still bearish. We have just had a break of structure to the downside. All right, so we'll just draw this on. In fact, just realized I haven't done the prior ones for you, but just to make it a bit more obvious where we are with that. So obviously the trade we're in before, right? We did get that break at the high. We had that break of structure to the upside. Now, price came back down here and we had the break of this low down here, right? In fact, what I'm going to do, just because there's actually so I'm going to want to talk through this price action back here at this point, right? Because I think this is quite an important mini lesson. So obviously we took that initial M1 short here, right, playing the 4-hour pullback, and we had a scale in somewhere around here. Now when you're in those shorts, kind of that first real major target would be demand within here, obviously trying to take out this M15 low to then potentially tell us that we are going to pull back deeper into that 4-hour area of demand. So if we go back to those trades, right, this is that M15 low down here that we've drawn across, right? Now as price comes down to that low, generally what you will see when we get the break of a low, appreciate there's some concepts here that we haven't quite covered yet, but in liquidity what we will learn is when price takes out a major swing low, generally you will get a pullback, right? You will see price start to pull back as bullish pressure starts to step in. So as price comes down and it starts to sweep out, it's only subtle, but even by a pip that's enough for price to trade that low, right? We can potentially look for long positions, right, to hedge our short positions, because if we know price is going to pull back, potentially we can look for longs. Okay, so how do we look for longs? We wait for breaks of structure to the upside, we wait for supply to start to fail and demand to start to take control. So what do we have here? We have this buy before the sell, so we can look to take that whole range, or potentially we can refine it to this M1 candle here, all right, and see what is going to happen. So price comes into there, right? Now we have a reaction. So literally as I'm seeing that in the market, not the best of reaction, but that's a fractal refinement, right? Because what's happened, price is pushed down and it's pushed up, but I'm just going to wait for a little bit more. Okay, so that for me is an inside bar, so that's even more convincing now, because this candle has failed to take out this candle's high. So that's enough for me to then draw that as the start of the reaction points. This is where you have to really pay attention to detail, right? So now, if price was to break above that high before it takes out that low, that for me would be enough to show me that potentially supply is failing. So now we have a break and close above. So now what we can do, right, is take that M1 candle there as an entry and we can get long. Now what you'll notice, right, just as I kind of size this up, let's say a 2-pip stop, is if I'm entering now, right, once we have that failed reaction, what don't we have? We don't yet have a change of character. So if you remember, this is just a flip. This is the most aggressive way of entering in terms of the actual price action, because all we have is an indication that supply is failing, but we don't have any structure failing. So this is the most aggressive way, but let's just see if it plays out. So we get tagged in, stop keeps us safe, just about, comes a little bit lower, and now we have the change of character. So if you did want to wait a bit for a bit more confirmation, you could actually now potentially set your order on this sell before the buy here, right? And then you would have your chalk and your flip, but this is a way you can get in a little bit earlier. Now, don't want to talk too much about management, but generally when you're kind of in those counter M15 trades, or not even counter, but counter the 4-hour trend, I should say, right? You can either leave your both trades open when you're in two positions, or you can be a bit more in and out with your trades and generally try and catch those 5R moves and just bank your profit and move on. So As we can see here, right, price does run 5R, and then if we play it forward, price then does eventually come down, and it would have stopped us out, depending on how you choose to manage your trade. But this is just to show you how you can play those aggressive hedging positions and still kind of trade the market both ways. Essentially what it was based on is a sweep of the M15 low, and then we get the change of character, or just a flip if you want to enter it before then, or you could have entered over here, right, once we did have the change of character. So yeah, I did just want to show you that, but obviously we know now with the benefit of hindsight that the 4-hour does pull back deeper. But yeah, it's literally just to show you this stuff happens again and again and again, session by session. Just look for those turning points in the market. Chock, flip, or just a flip in this case, right? And you can catch those turning points, right? So kind of going back to what I was saying about session timing, we've come into our 4-hour area of demand. We're looking at the 15-minute, and I would just bring this forward to just before the London session at 6 a.m. to pretty much where I'll be coming for my desk. So my thought process at this time is we're in 4-hour area of demand. I'm looking for a 4-hour high low, but I want to see price start to break structure to the upside, get those bullish changes of character, see supply fail and demand starting to step in. Now, okay, what we see, price breaks the M15 low, so what do we expect? We expect an M15 pullback, then it comes down, we get an aggressive tap into our refined area of demand, and then boom, we get our change of character. Now, another mini lesson I want to point out here is a lot of the times, right, especially when you kind of have rangy price action within here, there's going to be quite a lot of sort of M15 zones that we could draw on. We could have even been waiting for price to come down deeper into this origin zone here, right? You may not have drawn on this wick, but the point is, it doesn't matter, right? There'll be a lot of times where I do my forecast and I don't have the exact perfect zone drawn on that price ends up reversing from. But it doesn't matter, because what I'm doing is I'm watching the charts and I'm just letting the market show me the way. I'm letting the market tell me which area of demand it wants to react to, and I just look at market structure, because what's happened? We've come down, we've come up, we've taken the low, and then boom, we've taken the high. We've had that aggressive change of character, right? Because price reacted from this sell before the buy, came into supply, kind of really tried to break lower. Yes, we did get a wick break below, but then demand stepped in to take out that reaction to not only get that change of character, we've taken out this high. And we're just seeing a lot of momentum come in. So now what I'm going to start to do, we'll just play this forward, if I can get it to work. There we go, right? And now we've even wicked this high as well. We're seeing a lot of bullish pressure come in. But the key important thing as well is what I was talking about session timing, is this is when we know volume is also likely to be high, right? Right at the start of the London session. So now it's about 8 a.m. London is high. We've had this change of character here. We took the low, just draw this on, bear with, and then we took the high. So that is our bullish change of character. However, right, the M15 is still bearish because that was our low and this is our highest point. So price has tried to close above, but it hasn't done just yet. So for me, it's still bearish. But we do have an M15 bullish change of character. We've mitigated an area of demand that makes sense. We are within our 4-hour area of demand, and price has now spiked up higher, breaking multiple minor levels, and we've tried to wick break the high, and it's the start of the London session. So for me, this is literally all systems go, very high probability trade to start to look for a potential 4-hour higher low, right? So just going to refine this a little bit just so we can focus on price action, okay? So you can literally at this point just enter on the M15 zone, right? Again, you don't have to do all these lower time frame refinements. If you want to be a bit more hands off, you can enter like that, or you can enter on the EQ, and then you can get a bit more better risk reward. But for the sake of this example, let's do the lower time frames and see what we can see. So, right, we have had a very nice sweep of liquidity. Again, don't worry too much about this just now if you have no idea what I'm talking about when I mention that. And then we've had that very aggressive move to the upside. Just going to grab a sip of water as I'm starting to lose my voice. But yeah, so clear bullish intentions, right? This takes massive money to do this. Had a nice bullish move to the upside. So where can we start to look on the M1 for price to potentially react from our area of demand for us to get long? Well, we could literally just keep it super simple and just take that bottom last sell before the buy, and that would definitely be more than a valid entry, and definitely one that I would consider. But how can we increase it even more? So just looking for the one that broke structure, we can look at where the flip occurred. So what do we have here? We have a low, right? Price came down and took that low. So we have the whole buy before the sell, or we could refine it to just that last pivot point candle, right? This bullish candle here. And then what can we see? Price came into that supply zone, it reacted, and then it pushed up through. So that reaction point for me is where that kind of last point of demand stepped in to take out that high there. So I'm just going to refine this zone in a little bit. All right, and then this is pretty much picture perfect now to look to take a long position down here. You know, we can be a bit more conservative and cover that low, right, 2 pips. And then it's that limit order there, and we have seen pretty much everything we need to see. So let's just fast this forward and see if we get tagged in. Okay, so boom, tagged in, nice little reaction there as those orders are filled. So again, just to quickly go over this, what we're doing, 4 hour pro trend, we've now pulled back after that 4 hour breaker structure into our 4 hour area of demand, where potentially that 4 hour high low may form. We have waited to see an area of demand get mitigated on the M15. Excuse me, we've had a change of character to the upside, showing us supply starting to fail, demand starting to step in. We haven't had that breaker structure just yet, but we have had, you know, a decent amount of momentum to the upside. We pulled back into our area of demand, and now we've waited on the M1 for our entry, and we can start to target at minimum, you know, this 4 hour high, that weak high, to try and get that 4 hour higher high. So dropping back to the M1, now we've been tagged in. And another thing as well I want to point out, right, is literally, you have so long to spot this example, right? You know, like I was saying, you may not have that perfect refined zone drawn on or from the inside bar range, right? It doesn't really matter. You just can be a bit more loose, wait for price to start to react. Then we start to break structure to the upside at what, 7:45? It doesn't pull back into your zone until 45 minutes later. And then you have all of that time to set your entry and get into the trade. Now, let's say you didn't want to set your limit order and you wanted to wait for a confirmation entry. Then how I would be looking at this is I would be looking at this last area of supply. And I would want to see price come in, and I'd want to see price react, and then that reaction to fail, and ideally we get a change of character, right? And then I'd look for price to pull back in, and then we go. So let's see if we get that confirmation entry or not. So doesn't look like we did, right? Price is pretty much just smashed up straight through. Now, arguably, we did have a bit of a reaction. It's not the best, it's very, very small where price came in, and then these small buy to sell wicks here that pushed up through, so that'd probably be like a 5-second demand zone. So yeah, it would be more than valid to set your entry order there if you wanted to. Let's see if it comes back, but yeah, it doesn't come back. So this is what I was saying about, you know, waiting for extra confirmation. You're not always going to get it, okay? So just something that you have to accept in some cases. But let's see, you know, there's any potential scale-ins or other areas where we could look for an entry if we weren't already in the trade. So as prices start to move up, all I'm essentially looking for is another flip to start to occur. So we push straight up through here, so nothing too great. But what we can do is look for one in the pullback. So what you will often see in a pullback, right? So we have this big M1 push up, is price will pull back, right? Start to take substructure lows, and then sometimes what you'll get is then price will get that minor breaker structure, and then it will pull back in, and then we can look for an entry, right, within that pullback to then take it higher. So it's not as ideal entering high up on the leg, but we can do that, okay? So price is starting to pull back. Right, so you can see here on a lower time frame what that would be is price pulling back up into that 15-second supply, and it's trying to go lower, right? So that's the pullback initiating, then we've taken out that low, and now we've pulled back up into this area of M1 supply. So now what I'd want to see is a reaction here and see if we can start to see that battle between supply and demand. Okay, so now we've had that bearish candle come in, right? So that validates that this is a decent supply zone for me. So now what I would do in a live market is literally draw my M1 failed reaction across, and then obviously you could do you know, your change of character as well. But let's just try and speed this up for the sake of time. So price is starting to pull back. So remember, if this reaction is going to fail, it shouldn't take out this low down here. And then boom, what do we get? We get that break and closure above that reaction there. So now anywhere within the sell before the buy, you can look to get long. So let's be unrefined, or you could take that one doji candle there, or you could even take the wick if you wanted to do so. But yeah, let's just be really unrefined and conservative for now. And be consistent with the way we've been doing things. So literally the minute we get that failed reaction, that is where you have to be on the ball and looking to get tagged in with the entry. So you get tagged in the next minute or two. Price comes a little bit lower. Okay, so this is where if you had to set your entry order on the wick, right, you would have got a really, really tidy entry. But of course, sometimes price won't come down that low. But this is just a really good example as well of why you always should cover the low, no matter where you enter, just so it protects you as price fills more orders and then it starts to go, okay? So let's just see how that looks on the 15 seconds, just so you can see it even clearer, right? You can see that sell before the buy, that broke up higher, and the price has come down into that origin to mitigate it and go away, okay? So now we've got a scale in, and like I was saying, this isn't ideal, right? I'm really not a big fan of one, you're entering, right, with this larger range here. You're entering right sort of in the middle of it, you're buying more in the premium, you're buying later even in this leg, right? You're buying at the top of this internal leg. It's not well priced whatsoever when we're just looking at this section of price action. So getting in here is a lot more aggressive. But the reason, or when you have to decide maybe it's worth doing it for you, is understanding what is the move you're trying to capture. Well, we're trying to capture that 4-hour higher low. We've seen everything pretty much we need to see. Momentum's really strong. So actually maybe it's worth the risk because you're not just trying to target this high for, just under 4R. Actually, you're trying to target that next 4-hour, higher high. So if we were to scroll out, right, this is the 4-hour high up here. So actually the risk to reward is, nearer, nearly 20R, right, for that first one, and potentially, let's see, 24R there. So maybe that's when you go, okay, it's more aggressive. Potentially you're going to take a few more losses buying in these areas, but actually it's worth it in the long run, right? The law of large numbers, because this is going to more than pay for any losers, that you may take. So let's hop up to the 15-minute chart and start to target that 4-hour higher high and see if price starts to get up there. And obviously then we get that higher high, right? So on and so forth. But yeah, one thing I want to say is you don't have to limit yourself there because you are playing with the pro trend, you're playing with the daily trend. It's that first initial 4-hour trend change. So if you think you're well positioned, you don't have to get out of the next 4-hour high. You can start to look at those daily targets, right? Let's target the daily high. You can even potentially take some profits along the way, right? We don't have to just swing for the fences every single time. We've got our next 4-hour area of supply where 1, we can look to take profits, and 2, we can look to play 4-hour pullbacks, right? And then so on and so forth. And that brings us to the live price action, and we've just pretty much wicked that daily high. So yeah, you could have made a decent ton of profit, but it all stemmed from what? It all stemmed from literally just playing ping pong with the 4-hour zones, waiting for price to break structure on 4-hour. It comes into the 4-hour chart, we expect a pullback. So we start to look for, those lower time frame confirmations. Not going to go over it again, right? Because this video's gone on for pretty long now. But yeah, when you get those pro trend moves and you think you've caught the 4-hour high low, right, from a 4-hour area of demand, this is where, you can swing for the fences with a hell of a lot of confidence, right? Right? That is how you get those quantum leaps in your account. Right, you can see the R there. There's a hell of a lot of R. Now, don't get me wrong, I'm not selling you a dream here. This is not easy, right? You're not just suddenly going to be trading a large account and then suddenly just be able to, make ATR on a 400 grand account, £1 million account, whatever, £10 million account, because you're going to have to battle with extremely hard, psychology issues. It's going to be a hell of a lot of money running, and then sometimes you're going to have big pullbacks, and you are going to take a lot of break evens. Because remember what I said when we were on the 4-hour chart earlier, right? It's not just as simple always as price coming in back into the first 4-hour demand zone. We take a nice little entry and go, okay, I'm just going to swing for the fences now, because what a lot of the times can happen is you can be running a decent amount of profit, right? But then price can come all the way back. You could be running 20R even just to there, and then you could end up taking a break even. Price can come lower. You do the exact same thing. You take your entry, you go, okay, I'm going to be patient. I'm going to target the high. You could be running 20, 30R, and then you could get break even again. It could come lower, and the exact same thing can keep happening before eventually the real move goes. So if you want to be that type of trader that wants to capture those larger big moves and bank those real big kind of swing trades, you have to accept that there's going to be many times where you're running a decent profit and you end up with a break even, right? You're running a decent profit and you're breaking break even. But that's just part of the game you're playing, because when it does work and it does go, that is where you then have an amazing year literally in just one single trade, right? Because of course there's going to be plenty of market environments where we take a high, we retrace. We take a low, we retrace, and we're just ranging and we're chopping around. But it will come a time and experience that every time you get in a trade, you're not just suddenly going to expect a nice trending move like that. And actually we just play ping pong and we're a lot more aggressive. We get in and out, we take our 5R, we take our 10R, and we just play the compounding game that way. We bank and we move on. But then when we recognize that we're actually in a trending market, all the higher time frames are in sync and we're starting to go, that is when then you can hold with a lot more volume for those larger swing moves. Okay, so I do just want to make that point clear. But yeah, I just thought it was useful exercise just to go through literally the last few days we've had in the live market. I'm not having to go back 9 months, 18 months to cherry pick one little perfect example. This happens day in, day out. It's the exact same things. This is literally how the market moves and how we time those higher time frame swing points with lower time frame confirmations. Okay, and you'll see as your time in the community, right, every single day with our markups, week by week, you'll see the exact same things, the exact same entry models playing out again and again and again. Of course, every day there's not going to be those swing moves for us to take advantage of, but yeah, the power is there even on just one pair alone. So Go and practice yourself in your charts. Go and look at the hard time frame zones that you've drawn on so far, and just really dive into them. And then when you want to get a little bit more advanced, and when you start looking for those trade examples, literally just look at all of the higher lows in a bullish trending market, look at all of the lower highs, on the 4-hour chart, and then drop down to the 15-minute chart. See those changes of character, see the interaction between supply and demand, right? Look for those flip zones. Look on the M1. Let's see how it interacts, because even if we just go back here, right, when we were looking at those M1 shorts to play that 4-hour pullback, and then what did we look? We looked at that aggressive hedge as we swept the M15 low to play that pullback there. What could we have used to help us with our targets? Because it's literally just happening everywhere when you start to see it. So what did we have? We had an M15 sell before the buy here. All right, price came into it. That's when it reacted, right? So what should it do? That demand should make a higher high, but we come down, we take out the reaction. So that means we have a supply to demand flip in here. Right, and boom, that's how we could have then timed, that counter trade management with a little bit more accuracy. So if I just scroll back just to show what I mean, right, when we played that aggressive long hedge here, right, and then boom, you could have literally targeted the distal there, and then you would get out of picture perfect entry. But it's just understanding what's going on, right? It's that exchange between supply and demand is happening constantly, and we just use time frames to clear up our candles and read what is going on in the order book. Okay, so I'm going to leave that there. Hopefully you guys took some value from that. And I'm just going to show you, week in, week out, as we go through the market commentaries, as we go through the market the market breakdowns, right, how this happens time and time again, and literally how you can swing these trades all the way up here. I mean, I haven't even looked at this yet, but on Friday we had NFP, so big volatility. Don't usually trade that, right? If you don't need to. Just looking at it, right, you can see what happens here, right? Before the news occurs, we can see we have this sell to buy range, right? The unrefined range, we can see an aggressive move away. So that's how we can look at the range. Let's jump down into the 1 minute and see how we could have potentially traded this move. But this is literally how I do it, right? If this was you, sorry, I know I'm jumping around timeframes here, but just to kind of quickly show you how I would do this. All right, let's reset the chart. Let's say, okay, you can see price pull back and it moved away. So now I'm going to look at this price action, right? Without a bar replay, you don't even need it. And just look at, okay, how could I potentially have traded this move? I mean, I wouldn't advise you do it in real life because, I personally wouldn't risk my capital going into NFP. But let's have a look. So if we scroll back, all right, price has come into our M15 demand zone. I'm just going to zoom in here so we can see it. All right, I'm literally looking at this with you. So it looks a bit choppy at first, but let's just take this kind of, in chronological order. So we have some liquidity, right? Price sweeps it, we come in lower, and that's exactly what I want to see, right? Aggressive move in, boom, aggressive move out, right? It shows a lot of money being in the market. So we obviously have this buy before the sell, that's all supply. But where does the reaction happen? Well, we come up, we come up, we come up. Then you can see that reaction happen, right? So instead of taking the whole range, we can refine supply to just that last candle here. We want, right, the buy before the sell, price comes into it. It reacts, that lower time frame wick, so we don't need to jump down to time frame. We can literally do that on the M1. We can draw that across, right, down to the wick, and then boom, there's your entry. Not only do we have failed reaction, but we also have change of character. So what do we have? Liquidation, higher time frame mitigation of this demand zone. We have the flip, we have the chock, boom, all systems go. Obviously, all else things considered with your high time frame analysis, but if you like the area, just showing you the entry model here, right? Let's see, 1.5 pip stop. Just about keeps you in, and then that's literally how you could have traded that move all the way up to then the daily high there. Obviously it chops around a lot. That's typically what happens before big large news announcements. People aren't really trading the market, right? They want to get out of their positions before so, and then boom, that peaks at 25R. Again, nothing that I would necessarily recommend doing in a live market before a big major news announcement, but it's just to show you the logic behind what is going here with price action. It's the exact same thing again and again and again and again. Okay, so go and investigate those turning points in the market, look for the M1 entries, and just practice it and just collect as many trade examples as you can. So I'll leave that there. Hope you guys enjoyed that, and I will see you in the next one.